So sellers were definitively selling here. They had a couple legs to the downside. Scalpers were satisfied. If we look at their average objectives to the stop, we got the scalpers targets. Those are done. And now we're rolling back up. If shorts are still short, they're not feeling too great right now. And given the context that we just held off the 5-minute POC in a possible trap underneath that inside swing, there might not be very many pullbacks anymore. Looking for that pullback dip into that POC to retest. Retesting the POC for the bulls to attempt to try to take it back to the upside. As far as upside objectives go initially, it makes more sense from a scalper's perspective, unless we can do some work on the average. All right, first objective off. And see if they can pulse the top. Come on now, pulse the top. Get on through there. Where's the... Not quite there yet. There we go. Beautiful pop right back up into that scalper's objective. Woo! Fantastic. They almost dodged me. Well, thank you for coming back, market. All right, so coming back a little bit later in the day to really kind of understand what's going on, you can see that it's actually 12 o'clock now. And looking at what took place, obviously the video wasn't very long, right? A lot happened in that short span of time. So let's break down what actually took place. If we zoom this back a little bit and we look at where the POC was from the bottom all the way up to the top, the impulse POC, that was formed right there in the middle. Now, when the market started pulling back to that area, it does demonstrate a little bit of supportive nature, right? So some bulls coming in, maybe. And if we modify this forward a little bit, we can see that it kind of holds inside of there, but it begins to have some problems. They break through it. And when they chop through it, they didn't just, cut through it a little bit. I mean, they laid up a huge bear bar closing back to the downside. There's a lot of emphasis saying that the seller should want to take this a little bit further down. Now, I like a little bit of extra proof. So you'll notice when the market came back into that area, I was looking to defend that zone, scalp out of a little bit, grab another one finally at the 2-to-1 to the downside. So the context here is that sellers are trying to get this move lower. They have had short-term targets satisfied, but long-term targets could still be waiting. So with that in mind, if we've got this drive to the downside, we know sellers are short there, right? It's very obvious, and they're trying to get the move to go a little bit further. So let's continue this a little bit further. The average POC is at 570. It's at 570. Uh-oh, now all of a sudden, we start closing above it. And this is where the problems start, right? The bulls close above it. If they're bears that are in that and they're trying to short, that's obviously a major problem considering it just had a really nice dive down that went to a 2-to-1 objective for the swing traders if they were looking for an actual risk target, right? The actual risk target 2-to-1 was right there. You can see it played out perfectly. So when we start cutting above this, who's really going to come back and defend it, right? All of the sellers have already had the majority of their targets filled. And any shorts who remain in this, when you've got this bull bar back up, the next one closes bullish again. That's the one I tried getting into, but didn't get filled. Then the market continues to break away. After the breakaway move, when it pulls back, where does it dip back to? All of the shorts who were short in here, and we know they were, they realized they were wrong, and they used that as an opportunity to get the heck out of the way. Now you can see I actually exited it in hindsight incredibly early to this move. It's still going to the upside. Talk about salt in the wound. Nobody's perfect, but this is a really good example of how these setups can create not only short-term moves, but massive pivots for these giant rallies to the upside, which unfortunately I missed out on this time around. But keep a very close eye on these because they are developing POCs. We just had a video about that. Developing POC in the sense that if I were looking at it from the short perspective, it would have to break a new low, and it hasn't done that yet. So it could easily look really good for the shorts, and then all of a sudden it looks absolutely terrible, and the shorts have to jump ship. And if they're not fast to respond, look at the amount of pressure that they'd be stuck in if they were still short. Talk about a lot of pain, right? So I just wanted to take a quick second to back off of the the excerpt from the analysis room, because there's a lot of information here that you can really kind of learn from and understand. And keep an eye on these developing POCs while the market is going through. You'll see a ton of traps around them, but very frequently before a big move, it'll come back and it'll hit that zone of interest. So keep your eyes out on them. That's going to do it for this one, though. I hope you found it useful and interesting and something you can add to your tool belt. As always, if you have any questions, feel free to shoot me an email or drop a comment below, and I will get those covered for you from there. Have a great one, and we'll talk to y'all later. Thanks. Bye.